Welcome guys to yet another video. So how do you actually participate in the Forex market as individuals, as you and me, sitting at home and looking to sort of get started in this thing that we call Forex trading? Okay, so now that you know what the Forex market is and why the US dollar rules it, then the next big question is very practical, right? So how do you and I actually participate to buy and sell these currencies, participate in buying and selling? Because this market is so massive, it's big, financial institutions have created several different ways to trade. So if you read traditional textbooks or baby pips, you'll see that the options like currency futures, which were invented maybe in the 70s or in the 80s, early 70s, I think, when the bell bottoms and platform boots were still in fashion. Again, your age is showing. You'll also read about currency options and currency ETFs. But here is the insider and the truth, right? These instruments are heavily centralized and have limited market access to people like us, and are mostly built for large corporations and institutional fans. And especially looking at our geography, I mean, it's very difficult for us to sort of also be involved in some of these things. So you'll find that mainly it's people who are in the US and in Europe who might be trading these things. Maybe you've come across some of them on YouTube live streaming and actually doing this options and futures trading. These are still not regulated in places like here in Africa, especially here in Kenya. So very few of us, or rarely, do any of our retail traders or counterparts have access to some of these instruments. So as an individual trader sitting at home or in an office, you are what the industry calls a retail trader. And our playground is entirely different from what the institutions are actually trading and doing, right? So let's look at how we fit into this entire big web that we call the financial markets. So in the big leagues, there is the spot FX market. This is an off-exchange, or what we call over-the-counter market, where giant banks, pension funds, insurance companies, and any other big financial institutions with big muscle trade massive blocks of currency directly with each other, okay? So then when these institutions buy a spot contract, don't let the technicalities throw you off, but a spot contract is just a contract to buy or sell a specific underlying asset. Could be, let's call it gold. So then that's the spot contract, and they're legally agreeing to physically exchange those currencies within 2 business days, okay? So now think about it this way. If you are to open a trade on your phone, would you want maybe a big security van delivering maybe 100,000 worth of euros to your house or USD to your house, right? You'll trigger a lot of alarms around the area, and that is not efficient for anyone. So you don't want the physical cash, you just want the benefit from the price movement, okay? So this is actually, give me one sec. Hello. Good morning, my brother. Yeah, good. You're calling me a transformer. Shindwe. So of course not. You don't want anyone delivering wads of cash to your doorstep just because you bought a contract to buy some euros or some USD. So what you don't want, of course, is the physical cash in itself. You just want the benefits from the price movement on your chart or on your screen. And this is exactly where the retail Forex market comes in, okay? So let's talk about what a retail broker is. The bridge between yourself, seated at home, and the retail Forex market, and how do you actually get access to it. So to let us participate without the headache of physical delivery, we use the Forex broker, or a CFD provider. I know you've heard many of these terms before. If you haven't, we'll dig deeper into what exactly a Forex broker is and what exactly they do. But for now, just think of your broker like a retail store, like a shop or your local supermarket. They go into the primary wholesale banking market, okay? So they go in there into the financial markets, buy everything in wholesale, then they get the best global institutional prices or the best prices for the goods at a very tiny markup, which is what we call the spreads or commissions, which we'll get into a bit later, right? Whatever you see on your broker's platform as a price is them having bought them at a wholesale price, adding a tiny markup, then streaming those prices directly or live data directly onto the trading platform to allow you to either buy or sell when you deem it favorable. Here's the magic trick though that they perform behind the scenes, okay? So because you are trading a contract and not physical cash, your broker automatically rolls your open positions forward to the next business day before any actual delivery can happen. So what this just does is it keeps your positions purely digital, running indefinitely until you decide to click close or sell, okay? So your position will remain open until you decide to click close or sell. Let's talk about something called leverage, which the broker also allows us to do. Because again, buying $100,000 worth of the euro physically is a big problem. Buying it again, realistically, means you need $100,000. Now, majority of us don't have that bank balance sitting there. So then how can we trade massive volumes and try to benefit from the volatility in the market and the movements of price in the market with smaller accounts and be able to participate from a retail perspective? So leverage allows you to control a very large amount of money using relatively tiny deposits from your own pocket. For example, a standard broker might let you trade with a leverage of 1:50 or 1:100. Let's give that as a baseline. Some go all the way to 1:400. I think the maximum approved leverage for a jurisdiction like Kenya is 1:400 or 500. But there are others that go 1:1000, 1:2000. Anyway, so assuming we're using 1:50 or 1:100 leverage, right? That means just with a $2,000 account, potentially, in your account, you can control currency positions worth $100,000. Makes sense? You only have $2,000 in your account, and you're able to control through your broker. They're allowing you to use leverage, which is kind of like borrowing, getting a loan from the broker, that will allow you to open a position worth almost $100,000. Okay, so we'll get more into the nitty-gritties of the double-edged sword that is leverage, how you can take advantage of it, what it actually means for you, and what's the best recommended leverage for you as a beginner and as a professional trader as you transition, so on and so forth. So this is why you also don't need, because you have $2,000 and you're able to control $100,000 worth of market movement just because of the leverage that the broker is providing for you. This is exactly why you don't need millions of shillings sitting in a bank to start generating an income. Also, just remember, as a professional, you must respect leverage because it can magnify your profits. But if you don't manage your risk very well, it will also magnify your losses just as fast. Okay, so that is where leverage is a double-edged sword. It's just a tool that allows you to be a market participant, but you have to be responsible. With great power comes great responsibility. So depending on where you live, this retail structure is legally packaged as a CFD. So if you go to any of your broker website, you'll find that they are CFD brokers. What does CFD stand for? CFD is a contract for difference. A CFD, or a contract for difference, is simply a modern financial derivative. It's a derivative meaning it's not the actual underlying asset, it is derived off of the actual underlying asset. So you don't own the underlying currency. Instead, you and your provider agree to exchange the exact difference in price of a currency pair from the moment you open the trade to the second you close it. So this is exactly what gives you the ultimate flexibility to trade the market in both directions, buying and selling. So if you think an economy is growing or is going to go up, you go long or you buy. If you think it's going to go down, you sell or you go short. You can make money whether the market is climbing or falling down, and that's the beauty of trading. Make money while going up, make money while going down. So again, this retail CFD model is exactly how we bypass the gatekeepers, right? So it gives busy professionals like you and me the exact same pricing power and market access as the multi-million-dollar fans out there that we've heard of, right from our laptops seated at home from whatever location. In the next chapter, I'm going to be looking at how do we actually track our profits and our losses on some of these contracts that we are buying and selling through our brokers, using all these things called pips and lots. So if you want to master this skill and cut through all the amateur noise or all the flashy things that the trading industry tends to throw out there, make sure you hit that subscribe button. Let's keep moving forward to the ultimatum goal, which is earning in dollars and spending in Kenyan shillings, or spending in our favorite local currencies. I'll see you in the next chapter. Cheers.